Alright, hey guys, Scott here again with a brand new video, and so in this one, I'll be giving you all a very detailed tutorial of the Analyze tab here in ThinkOrSwim, which in my opinion is probably the most useful feature of this entire platform, right? Because as you're going to see here, the Analyze tab allows you to dive super deep into the risk profile of any new option trade that you might want to make, to assess at which prices you're going to either make money or lose money on that trade. And then also you can analyze the exact chances or probabilities of those events actually occurring. Right, so basically you can assess your exact chance of payoff or not on that position based on all different kinds of scenarios that could possibly play out. And then finally, you can also use the Analyze tab here to see how possibly adding this new option trade to your entire portfolio is going to impact your portfolio as well, right? Is it going to make things more bullish for you, more bearish, more neutral, etc., etc.? So bottom line here, guys, is that the Analyze tab here in ThinkOrSwim gives you pretty much every possible piece of critical information that you might want to consider before making a new trade, right? And therefore, it allows you to make the most informed decisions as to whether you want to actually make that trade or not, or at the very least, make adjustments to it before you go ahead and send in that order. Now, briefly though, before we dive in though, if you guys want to receive up to 13 free stocks where each stock could be worth up to $2,000, then make sure you watch until the end of the video. And then also, if you want to join a very exclusive online community where you can learn how to trade options and my overall approach to the markets, then you can now join my options trading Discord as well. So definitely check out the description of the video below to learn a lot more about that. And then lastly here, for anybody who is also brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you join SKILLSHARE using those links, you'll get a full 1-month free trial. Alright guys, so now we'll dive in here, and so first up, let's put together a very basic option order for a new possible trade that I'm considering making for my portfolio here. So real quick, we'll go to the trade tab and we'll look up, let's say, Apple. And so for example, let's say that I'm bullish on this stock for some reason, and therefore I want to sell a simple put credit spread. And so we'll go into the October monthly cycle with 30 days left to go. I'll unfold that tab here, and then we'll scroll down a little bit. And so as you can see right now, the current price for Apple is a bit less than 157. So with that in mind, I'll choose my options here, my put options, to be a bit out of the money. So maybe I'll sell the 150 strike put option as the short contract of this spread, and then I'll buy the 140 strike put option. So this here's going to be a $10 Y put credit spread. And so now I'll go ahead and right click on my short contract and go to sell and vertical. And here we go. This is the order to sell one contract, 150 strike put option, and then also buy one contract of the 140 strike put option. And then as you can see here, I'm going to collect a bit over $200 for making this trade. Not too bad, which therefore means my maximum possible risk on this trade is about $800, right? Simply taking the width of the spread here minus the starting credit. So 10 minus 2 is 8, then times 100, that's $800 or so. But of course, if you wanted to visualize all of that plus a whole heck of a lot more, then simply right click on the order and go to Analyze Trade. And then as you can see here, that brings you automatically to the Analyze tab here in ThinkOrSwim. And so what you're seeing in the top portion of this page is the diagram showing the risk profile of this new put credit spread, which you can also see down here. And specifically, as you can see here on the x-axis, this is showing you a possible price range for Apple stock, and you can also click and drag to change the scale basically. But for right now, we're seeing a range between 130 and 180, which is probably good enough because Apple is not a very volatile stock. And then on the y-axis here, this shows you your possible profit or loss based on where Apple moves across time, right? Basically across this price range here. Now also notice on this chart though, you're seeing two very different looking lines, one in blue and one in purple. Now the blue line is showing you your profit or loss by the actual expiration date of these put option contracts, which is October 21st. Right, so basically as you can see here on the chart, as long as by expiration, Apple is above a price of $150 per share, basically your short put strike, right, 150, as long as Apple is above that price, you are going to profit the full amount of money, which is $200, right? However, if the opposite occurs and Apple decides to fall in price, then by the expiration date, this line shows you how much money you're going to lose depending on where Apple ends up by that time. Right? So let's say, for example, by expiration, Apple is at $145 per share. Then according to this blue curve, you are going to lose about $300. And then of course, if the worst possible scenario does play out and Apple just crashes in price, then again, by expiration, the worst possible loss you can face on the spread is about $800. And you can also see that exact number here in blue on the bottom left corner of this chart. So to be totally specific, the max loss is $798. And you will face this loss if Apple ends up below $140 by expiration, which also is your long put strike of 140. And then also one last thing, take note that beyond your short strike of 150, the max possible profit stays exactly the same at around $200, right? Because that's the maximum credit you collected on the trade entry if you actually go ahead and make this trade. So again, this number here is the most amount of money you can make on this trade. And of course, also, even though in this example, I'm just showing you a put credit spread, you can put any kind of trade on the Analyze tab here. Vertical spreads of all sorts, iron condors, covered calls, strangles, straddles, anything that you want, you can put on the Analyze tab. So real quick, for example, if we go back to the trade tab here, and let's say also I wanted to buy some shares of Apple stock as well. So then what I can do is click on the price of Apple and go to buy. And then down below, you can see a buy order by default to purchase 100 shares of stock. Maybe I just want to purchase 25 shares of stock. But again, before I go ahead and make this order, I can right click and go to Analyze Trade. And here we go. So now we can see both my Apple put credit spread and my 25 long shares of Apple stock. So therefore, on the chart here, you're seeing the combined risk profile of both those trades together. And so based on this example, I hope you can see just how useful this feature here can be, right? Because no matter how complex your position might be, with both options and stock possibly thrown together, you can still analyze the entire risk profile of the full combined position and see where this position is going to make money or lose money and at which prices. But now also, what about this purple line here as well? So this line also shows you your profit or loss on the combined position, but not based on the expiration date of the contracts, right? That's what the blue line here does. The purple line shows you your profit or loss based on today. So right here, for example, you can see the current price of Apple stock at just over 157. So as you can see here on the purple line now, if the price of Apple stock were to start increasing, then you would start to make money. But conversely, if the price of Apple stock began to fall in price, then pretty much immediately you would begin to lose money on the combined position. Even though, of course, by the expiration date, you might still be profitable, right? So even though today Apple might fall down to about $152 per share or so, and therefore as a result today, you would show a loss on this position, but if by expiration Apple was at this price, then you would actually still make some money. And so the reason for this is because options have extrinsic value or time value that's still baked into the price of the contract until expiration eventually arrives. And so over the course of the expiration cycle, that remaining extrinsic value will slowly deteriorate, but until it actually hits zero on the actual expiration date, you're not going to face your max profit or your max loss as an option trader. So bottom line, I do think it's important to look at both curves here, both the blue one and the purple one, but ultimately I think the most important one of these curves is the blue one that shows you, again, your profit or loss by the actual expiration date. But now moving on here, what about the actual probabilities of these kinds of things actually playing out? I mean, looking at the chart here, if Apple were to fall down to a price of $130 by the expiration date, you would lose a lot of money, about $1,500. Now, of course, that might seem pretty scary, but the actual chance of Apple falling all the way down to this price level is pretty darn small. And in fact, as you can see here in this light gray area of the chart, this is showing you a 1 standard deviation price range, which basically means, as you can see right here at the top with probability range, there's about a 68.27% chance of Apple being anywhere in this range by the October 21st expiration date. Now you can also change this range based on any date that you want in the future. So you can just click on this calendar button and again, pick whichever date you want to look at. But I think it's the most relevant to look at the actual expiration date of your contract. So again here, October 21st, that's what I'm looking at. And then also you can see probabilities broken up into more detail with these small numbers right here across the top. And specifically, each percentage here corresponds to the chance that by this date, Apple's going to be in any one of these smaller ranges, right? So for example, the chance that by expiration, Apple's going to be less than $141 per share is only about 16%. That's a very small chance. And then the probability of Apple being above this price, but less than the current price right now is 35.75%. And then as I explained, the chance that Apple stays anywhere within this larger light gray area by expiration is again 68% about, which is going to be the sum of these two probabilities right here, right? Because basically this larger range is simply broken up into two smaller ranges where the current price of Apple is the price that divides them. And then lastly, the chance that Apple is going to be above 174 by expiration is only about 15, call it 16%. So therefore, of course, the sum of all these probabilities is going to be 100% because, of course, by expiration, Apple's going to be somewhere across this large spectrum of prices. So again, bottom line, you can use all this information to figure out the chance of either making a lot of money or losing a lot of money on a particular position. And you can also click and drag these barriers here to any price that you want. So again, if you want to see the chance that Apple's going to fall down to $130 by expiration, I can just click and drag this line all the way over to that price. And here we go. You can see there's only about a 4% chance of Apple falling down that far, at least by the expiration date. So even though it's possible to still lose a decent amount of money on this position, the chance of that actually happening is very, very small. And then one final thing to note about these lines right here, if you want to reset them back to where they were at the beginning, just come down here to this bar and see price slices, go to the far right and click on this button, and then go to set slices and set them back to, I typically do a 1 standard deviation range, which as you can see here is shown by -1 sigma base plus 1 sigma. Kind of complex there, but that's basically what this means. This here is 1 standard deviation. This is 2 standard deviations, and this is 3. So you can take your pick, but again, I typically do a 1 standard deviation range. And there we go, everything's reset. And so up to this point, I've shown you pretty much most of what you can do with one particular position, but also, as I mentioned, you can look at this possible trade and how it's going to impact your entire portfolio as well. And so now I'm going to come down here and click on single symbol, which is what it should be set to by default, and then go to portfolio beta weighted. And then lastly, at the top left here for your beta symbol, I typically choose a major market ETF like SPY. And then at the bottom, we can see again my Apple trades, the put credit spread, and the 25 shares of stock. And then below that, these are all my existing positions that I have on right now. So I've got trades on in AMD, Meta Platforms, NVIDIA, etc., etc. And right now, as you can see here with the Apple trades, this box is currently checked. So that means right now in this chart, it's currently showing you how my entire portfolio is situated compared to SPY or the S&P 500, assuming I were to actually make these Apple trades. Right, so beta weighting in general takes a deep look at the exact relationships between the stocks you have positions on right now and the broader market, in this case, the S&P 500. Right, because when the S&Ps go up on a particular day, some stocks might go up by a similar amount, other stocks might go up by a huge amount, and some stocks might even go down typically when the market goes higher. So again, based on those unique relationships, and then also, of course, based on the exact positions you have on those stocks as well, beta weighting looks at all of that and factors it together to see how your entire portfolio is going to move around when the S&P 500 moves around as well. And so if we take a deeper look at the chart here, it basically functions in the exact same way as for the standalone Apple trades that you saw earlier, but now you're seeing my entire portfolio here, not just one particular position. So again, on the x-axis, you're seeing a possible price range for SPY in particular, and then on the y-axis, you're seeing my profit or loss on my entire portfolio as SPY moves around. And same thing again with this lighter gray area, right? This is showing you a 1 standard deviation range. So the chance that by the expiration date of, in this case, September 24th, the chance that SPY is going to be within this range is about 68%. And then of course, if that does happen, or if that does not happen and SPY moves beyond that range, then again, I can look at these curves here to see where my approximate profit or loss is going to be based on those prices. But also here, I can come down below and toggle on or off any one of my current positions, including this hypothetical Apple trade, right? And see how it's going to impact my overall portfolio. So real quick, I'll toggle off my Apple trades here. And there you go. You can see my entire portfolio just shifted a little bit. And ultimately, as you can see here, if I do this multiple times, you can see that adding my Apple positions would move my entire portfolio curve a bit to the right, which therefore makes my entire portfolio a little more bullish. And that should make sense because both of these trades here are bullish. And then again, if I turn off these trades here, my portfolio curve shifts more to the left and therefore becomes more bearish. So therefore, I now have a much greater price range to the downside where SPY can move potentially, and I'll still make some sort of profit. And then same as before, I can click and drag these barriers to any level I want, and then assess the exact probabilities of SPY moving to these various price ranges. And then lastly, one more thing I'll show you here is, chances are, if you have multiple different option positions on right now, chances are they're going to be in different expiration cycles. So therefore, to factor that in, I can come to the top here and click on this button, which right now is set to just 1 expiration, then go down to expiration, and I can show up to 4 different expiration cycles on this one chart. So let's see what happens when I choose maybe 3 different expiration dates. And there we go. So as you can see here, I now have a lot more different lines on my chart, and you can see the exact dates that each line represents in the bottom left-hand corner. So again, the blue curve is showing my profit or loss across my entire portfolio by September 24th. The red curve is showing you by October 1st, and the gray line by October 8th. So actually, if I wanted to include my Apple put credit spread here, I might have to go to 4 expirations. Let's take a look at that. And then also I have to come down here and toggle this position back on. And so there you go. So now in this yellow line, you can see my profit or loss by the actual October 22nd for some reason, 22nd expiration date. Should be 21st, but close enough. I think just for some reason, they always add 1 extra day on top of the actual expiration date. But again here, all these dates basically show you the expirations that I currently have trades in right now in my portfolio. And then of course, based on all that, I can see where my portfolio is going to make money or lose money based on those different expirations. And then also if I wanted to change this light gray area, which right now shows you a 1 standard deviation range based on the September 24th date, I can also change that as well. So if I want to see 1 standard deviation based on my October 21st expiration for my new Apple trades, I'll go to October and then October 21st. And there you go. So now by that date, Apple could be anywhere in this range with about a 68% chance of doing so. And then ultimately, of course, I can take all this information, both analyzing the individual trade and the risk profile, and then of course, based on how it's going to impact my entire portfolio here, I can take all of that into account and decide if I want to make this trade or not, or again, at least if I want to change some things and make it a better fit for my portfolio. Now also, one final thing I do want to clarify here is in regards to the beta weighting feature here, do not take all these numbers as exact predictions basically, right? These are all approximations based on statistics and correlations between stocks and the S&Ps basically, and things can definitely turn out a bit differently in reality. Right, so again here, all these numbers you're seeing in the bottom left-hand corner, which again show you my profit or loss based on some expiration date, those are all just approximations. If SPY were to actually move to any of these price levels, chances are the actual results, my profit or loss, would be a bit different. But still, in terms of getting very good estimates and approximations for how your portfolio is going to fluctuate when the market moves around, I think this is a very, very powerful tool that you must use in your trading. Right? Because bottom line, having a very well-balanced and well-diversified portfolio is crucial, right? So if based on this analysis, you see that your portfolio is leaning very bullish or bearish, that's going to be an indication for you to go ahead and make trades that might balance out that bias. right? So again, if your portfolio is leaning very bearish against SPY, then you might want to make some bullish trades to balance things back out. And then conversely, if you're too bullish, consider making some bearish trades to balance things out again. So ideally, if you can construct a portfolio curve like this where you have a lot of room on either side of the current price of SPY to still make some money, I think that's going to be a very ideal place for you to be. But of course, also definitely feel free to create a portfolio that does have a bias in one direction or the other as well. I mean, everybody has their own opinion about where the market's going to be going. So at least this tool here in ThinkOrSwim gives you a very quantifiable way to create a portfolio that accurately reflects your opinion about the market. And so with that being said here, that's going to do it for this video. But of course, one last thing, as I mentioned, I've got a very cool opportunity for you guys where you can receive up to 13 free stocks. So basically there's a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they're offering you the opportunity to receive up to 13 free stocks when you open a brokerage account with them using my specific link in the description of this video. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by competing platforms. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your trades and your investments are properly insured. And so if that sounds good to you, then again, use my link in the description of this video to sign up and get your free stocks. And also don't forget to check out and join my options trading Discord as well as my SKILLSHARE courses. Links also in the video description. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.